Hello, everybody. At this time, we are talking about banking as a service. Banking as a service describes a strategy in which financial technology companies or other non bank businesses partner with traditional banks to provide you with banking services such as checking and savings accounts, all in one integrated platform that becomes a single destination for your banking needs. And then we move to advantages of banking as a service. The first advantage, operational efficiency. Banking as a service is primarily oriented toward business opportunities, profitability, and operability of companies. This includes providing authorizations to different businesses in diverse industries to develop technological infrastructure without the need to pass through government regulation or acquire specialized knowledge. This is also without the possibility of accessing financial technology and support to allow them to operate under their permits and licenses, even creating new business models. And the second, customer attraction. As a result of the simplicity that generally characterizes bank as a services, a growing attraction of new customers ends up being a natural consequence. It is by knowing their customer profile better that companies will be able to offer personalized solutions that will help conversion even more. And digital transformation. As digitization processes differ greatly from one company to another, especially in the banking area, where technological adaptation tends to be slower, an available bank as a service infrastructure stimulates greater and easier innovation. Solutions like automation open the way for organizations to more quickly scale banking as a services, as well as a simplified implementation of digital services and technology. And then what are the benefits of bank as a service? For traditional banks, bank as a service has allowed for rapid digital transformation without hefty investment in research and developments or in infrastructure. It has given them a new lease on life with extended product and service offerings. Through bank as a service, financial technology innovators have found markets for their products without having to obtain a banking license themselves. Their products are simply pledged into the host platforms, becoming an integral part of the overall banking ecosystem. Customers feel the benefits in their user experience, which is no more streamlined, safe, and secure, with more options from one single financial services provider, including current and savings accounts, loans and mortgage, foreign currency transactions, and more. The entire financial services sector benefits from more innovation made possible by the advent of bank as a service. By partnering with existing institutions to share their products, financial technology entrepreneurs are getting their ideas to market more quickly and getting a faster return on their research and development investment, and are then able to spend more time on new developments rather than navigating the complexities of financial regulations and infrastructure. And then, what is the relevance of banking as a service for the financial sector? Although the idea of democratizing financial services is already quite disruptive and innovative, banking as a service has allowed many organizations worldwide to start expanding their area of performance. For decades, a large number of companies, particularly SMEs and startups, were greatly limited in offering banking products or under licenses in the sector. The costs associated with adaptation and adoption mean substantial and unattainable investment for these types of companies. In this regard, banking as a service brought banking to all types of companies with the possibility of offering attractive services to their clients under their own brand without depending on other institutions. In turn, by making greater control of financial data available to the users themselves, which pushes companies to accelerate innovation. This will lead to the popularization of open banking and allow relationships between customers and banking institutions to grow stronger, bringing these products to more users along with customized functions. And then banking as a service examples. The first example, online banking. Banking as a service can help financial technology or non-financial technology companies provide online banking services to their customers instead of focusing on bank licenses and integrations. They can focus on improving their services. And then second, offer debit and credit cards. Banking as a service model can allow non-banks to offer credit and debit cards, to their customers. Customers can get real-time updates of all their transactions through an app. The customer's account details and payments are displayed in a user-friendly manner. And then the third, offer loans. Banking as a service can also allow businesses to lend funds to customers. For instance, an airline, can offer one-click loans to customers to ensure undisrupted travel plans and a better customer experience. Then fourth, investment services. Another way non-bank and financial technology players use the banking as a service model is by helping customers automate finances and investing assets. They can help customers get a personalized investment with low-cost index funds. Moreover, they can automatically rebalance the portfolio is consistent with the customer's investment plan. Furthermore, they can match the investment needs of the customers. I think it is enough. Thanks for watching.